Hello everyone, welcome back to my channel. So this video marks the end of the week number 51 in this Road to 100k Realized Return Challenge, and this has been a very positive week for us. We managed to basically get probably some of the biggest amount in premiums that we ever been able to collect. And especially because the markets held themselves quite well, I would say, over the course of this week. Because even though there were a lot of data coming out, especially inflation data, which was kind of mixed, a little bit concerning on the consumer side, but then the earnings that eventually came out, apparently because it was probably one of the biggest drivers of the market this week. The earnings results from many different companies ended up being quite positive, and I believe that this was a precursor for the markets having gone to basically going again close to record highs and record another positive week. As you can see here, both the QQQ and the SPY finished above, relative to above what they finished off last week. The only exception was the IWM, which basically finished when basically at the same level at which it ended the week before, and so this was not actually bad for us because that allowed us to continue to sell options on the IWM without having too much of a drawdown when we sell puts, and still allowed us to, on the rebounds, to basically sell again the shares that we were assigned. And as you can see here, looking at our scorecard, these were the trades that we executed this week. Here are the dates, and if we consider the fact that these are all the premiums that we collected, we have a sum. I have to use the OneDrive of Microsoft Excel this time around. This is in Portuguese, so never mind. But the sum of all these premiums are $1,485. But we also collected a $50 capital gain on these shares of ARKK because we were assigned these shares at 72.50 and we managed to sell those back as 73. So we had a $50 capital gain because we only were assigned 100 shares, so 100 shares times 50 cents equals 50 euros. And ironically, this could have been a lot more if we did not sell the calls, because here probably because of course this is a quite volatile index or exchange traded fund, ETF. And even though we were assigned last week at 72 and 50, and because it basically began the week very close to 73, we decided to go ahead and go for a 50 cent up above capital gain, of course. But I would never expected that the ATF would rally in this way and would reach even up almost 79 at some point yesterday. And of course, if we would have sold the shares at around this level, the profit would have been much higher, probably in around 250 or something like that, which would have been very good given the fact that we only invested in these shares $7,250. But we, of course, with 2020 hindsight, it's always easier. But nevertheless, this is a quite volatile ETF. Keep in mind here, the volatility is relatively high, so we have to be quite careful in managing the puts if we end up selling again puts on these index. But either way, this was also a week in which we went back and forth in terms of the shares of IWM, because we had all of these ones which we were not assigned. Then on Wednesday, because of the concerns about inflation data, we were assigned shares of IWM here. And yeah, this is on Wednesday. We were assigned. We managed to sell those back at the same price, so $222. So we broke even, and we still collected $723 in premiums, which was quite good. But even so, yeah, basically there was very little that we could do. Because we sold, yeah, but this is exactly what happened, because we sold, we were assigned on Tuesday, and then on Wednesday, I recall correctly, the price went down on Wednesday, as you can see here. And because the price went down, we basically bought back the calls, and I just went ahead, and on the same day I sold more calls, but expiring on the next day, on Thursday, which, given the recovery that took place on Friday, on Thursday, this ended up being not working out well for us, because we could have sold here. We could have sold the calls either at the higher strike price, or even if we use the same strike price, we would have collected a lot more premium. So this was a lost opportunity. And yeah, the only way our move would be more profitable is if the stock continued to come down on Thursday, and or would it remain the same and we'd simply allow the time decay to take its course and bring the value of the option down. But the only scenario that was against us occurred, and the stock basically reversed the move and went up, and because of that we were assigned. We broke even, not a big deal, but we could have collected more premium out of it. And then on Friday, again, because of the pullback that we experienced in here, this actually was not the best day for us. Not because, of course, it's not necessarily bad, but as you can see here, the stock ended up the day on Thursday here, and it opened with a gap up. So because of this, we had to sell puts at a higher strike price, but immediately after, the stock came down. They basically reversed the entire movement that happened pre-trading, and it just came down all the way and never recovered. And the result of that, we were assigned at $223, and these are the shares that we currently have. Nonetheless, we collected a very good premium out of this. We collected 31 cents on each share, and even though and the probability of profit was relatively high for the amount of premium that we collected here, because usually it goes around here, as you can see, it goes around the 22-20 cent for this kind of probability. But in here, the increased volatility of the day meant that these puts were valued at 31 cents, and so we collected, of course, $336 in premium, which is very good. But the added volatility ended up working against us, and we were assigned the shares. So next week we will see what's going to happen before the market opens, but at least we are going to sell the calls at this strike price, or if the stock rises pre-trading, we will probably go even higher and try to sell calls with a 224 strike price. We never know. We'll have to wait and see what happens. But we also had some spare cash, and we went ahead and sold a put here on Friday, actually on Thursday, on the XLE, which is an ETF that tracks the energy sector. yeah, and basically they expire worthless, so there was nothing to worry about. As you recall from last video, we also sold a put on a ARKK on 69, but given the strong advance that the stock had, especially since Wednesday onwards, this one expired basically worthless. Would expire worthless, but we bought it back before at 1 cent, and we use this cash to sell this put at XLE to collect some additional premium. But it was a very, very positive week, as you can see. We are almost breaking even. I believe we should be close to breaking even on the year after the 9k plus loss we had on April the 9th. And so we will continue to chop it up and working through this way. Again, because of the way these ATFs are behaving, especially the Qs, the QQQ, which is again, it's near all-time highs again. Actually, yes, it's very, very close to all-time highs. The high is 663.32. We will continue to focus more on the IWM because it's nowhere near its all-time high yet. Here, and looking at a 5-year chart, it's still some way to go, and the added volatility will give us a little bit more premiums, and of course the chances of a pullback are relatively less compared to the SPY or the QQQ, and that's the way we are going to continue to proceed from here. Also with the spare cash, because given the amount of money that it's necessary to sell put on the IWM, any spare cash that we have, we will use it to sell more puts either on ARKK or other ETFs such as the XLE, which is also a bit more volatile than these ones, the IWM and the QQQ here. Yeah, I can show you here. Yeah, which is also, in this case, it is more or less the same as IWM, so we are relatively comfortable with it. But it's, of course, it's nowhere near the ARKK. But still, it's another potential alternative that we have to invest or to try to get some premium out of the extra money that we have in our account. But we will see what happens. By the way, just a slight remark here on Pfizer. As you can see here, sometimes the stock market can be really cruel for us, because after the stock hit those highs or basically that skyrocket through our strike price at 25, which led us to lose the shares immediately. Since the start of this week, the stock basically pulled back and came down in a big way, and now here it came from the beginning of the week at 25.60, 25.65 to 24.50 with a huge pullback here on Tuesday. So there is little sense for us to sell the shares at this point. Now, one note to keep in mind, if you recall, we mentioned that there must be some sort of resistance. Now became support as we cross it around the 24.50 mark. So we'll see next week if this now support holds up and the stock bounces from here, because it would be convenient. It would be nice if we could sell the shares, these remaining 40 shares, at a slightly higher price and get some of our money back. But for the time being, this is all. Feel free to leave your comments in the comment section down below. And also, I'm also available on LinkedIn in case you need to ask me any questions. And of course, feel free to like the video and subscribe to the channel, and we'll reconvene on Monday to start the week number 52 in this challenge. It's almost a year and it's been ups and downs, but I'm sure that we'll continue to pave our way towards the end of this challenge, of course when we reach 100k in realized returns, and I'll see you there.